Well, welcome back, everybody. You know, some people are already hard at work on their taxes, while others, well, they put it off as long as possible. It's important, though, to address some of the questions to help you save money when it's your turn. Here with some great information, a certified financial planner with SC Parker, Jeff Hahn, who's back. Good morning.
Good morning.
Do you have people coming in to do their taxes already?
Well, people are getting, we don't do the taxes ourselves, but people are getting prepared for
Yeah, and you're helping them get prepared, so because you have to bring the right stuff to your tax preparer to get the benefit of everything.
Yes.
Yeah.
And from our end, you know, it's the 1099s showing the income from the investments, and the capital gains is always a big thing, right?
Yes.
When you have an investment and you've made one investment, sold it, that's called a capital gain, provided it went up.
Yeah.
Right? Right. You know, those are liquid investments. They go in both directions, right? So it may make sense to, you know, during the year to sell some things that are down to offset the gains. But that's a whole separate tax and a whole separate line item on that 1040. So yeah, it's a lot of work as far as that goes.
And if you can think about some questions that you might have at this point, you could feel free to give us a call at 644-9840 because we're going to keep Jeff for a few minutes this morning to make sure we get everything answered for you. So the 1099s is important. Withdrawals from 401ks.
Yes, and that's a separate 1099, right? So you get they'll send you a statement saying, you know, this many dollars were sent out to you, and those will be coming out in the next couple days.
Yeah.
On the investment accounts, the 1099s are probably a couple weeks away.
Okay.
Right? They usually get an extension just because they have a lot more information to gather.
Okay.
Yeah.
Your IRA contributions, that information has to go with you too.
Yes, you want to keep track of that, and that'll show on your statements for the accounts themselves. But with the IRAs, you have up to April 15th to make donations for last year.
Okay.
Okay. So a lot of folks will go and they'll sit down with their accountant and he'll say, if you put in X thousands, you will save, you know, X dollars on the taxes, and they'll figure it out that way. And that's a big part of our business at this point in time, right up through April 15th. It's just crazy with that stuff coming in.
Wow.
Right?
I can imagine.
Yeah, which is great.
Yeah.
Right?
Right.
It's a one way. For people, the annual contribution is $5,500. If you're over 50, you can get $6,500. There's an extra catch-up provision for those.
Okay. Also, interest payments on home equity.
Yeah, interest payments on equity lines are, you'll get a 1099, actually, it's not a 1099, it's another reporting form from
A lot of forms are coming in from the government right now.
So that'll come right from the bank or the mortgage holder, right? And it's one of those things that if you're itemizing, you can deduct that, and the accountants know how to figure that out now.
And of course, charitable donations, it's important now to put all that together so you have that.
Yes, and for donations, I think it's if it's over $1,000, you're going to get a letter from the charity saying you gave so much, right? And that's just one of the documents that they want to see. But keep track of all that stuff, including contributions you make to like Goodwill or the AMVETS, those kind of things. So you get a little receipt when you take it over, and it's an honor system. It's up to us to keep track of what we gave and put an estimated value on it. But it's definitely one of those things that, you know, sometimes you just throw it in the box and that kind of thing. If you keep track of it, every little bit helps.
And you know what? That adds up. You don't realize sometimes, you know, you're charitable, you don't even get a receipt for a lot of things.
Yes.
But it adds up. At the end of the year, you know, you're due to be able to claim that.
Yes, and if you're doing volunteer work for a charity and driving, there's a mileage calculation for that stuff too that you can take a deduction for.
All right. If you have a question for Jeff, 644-9840. Let me move off the topic for a second, Jeff, because I think a lot of people are relieved that the president's plan to tax the 529 plans for the college kids is not going to happen. I think a lot of people concerned about that.
Well, yeah, and a 529 it is a college savings plan. That's what they're called, and each state has their own plan. So there may be deductibility on your state income tax for contributions that you make, right? Not federal, but state. But the growth and interest that you earn on a 529 when it comes out is not taxable, provided it's used for college expenses, not high school or a car or anything like that, right? It's got to be for tuition and that kind of thing.
Yeah.
And again, you get a 1099 for that, right? And you want to make sure that your expenses, that the checks you're writing out to the school are more than, equal to or more than what you're taking out of the 529.
Right.
Okay, because then it becomes, if it's not, then it becomes, you get into some taxes, right? If you use that money for anything else, it becomes taxable, so.
Yeah, they'll be using that for tuition.
Right.
We have Mark from Tonawanda who's standing by on the phone with a question for Jeff. Good morning.
Good morning. My question is this. Our son was a Disney College intern last year. He earned about $8,000 working for Disney in Florida. I know Florida does not have a state income tax. Are those wages taxable in New York? And then, two, we claim him as a dependent. How much of a tax liability is he going to obtain on an $8,000 income?
Ooh, that's a good question. Well, all those are good questions.
And how old is he?
Now.
How old is he?
21.
21 now.
And does he file his own return?
Yes, he does.
Okay, so his return, that income would show on his return. And he's still a New York State resident. Did he have earned income from New York?
Yes, he's a college student at Buffalo State. He does not work right now, but last year, his wages in Florida from January through August, he lived at Disney, was approximately $8,000. Out of that, of course, they deducted money for rent, for living on Disney housing, and then he had to pay for his own food down there, and that's basically, it cost us money.
Yeah.
They pay in sunshine, that's what they say down there.
Yes.
It's interesting because that's a very similar situation that my son is in.
Yes, you were
I
just
was
telling
telling you
me,
about,
yeah.
right? One other question though, did your son earn any money in New York State last year? I think he may be gone.
I'm going to say no. I'm going to say no, only the Florida job.
I think that's a question I'm going to have to defer to their tax attorney or tax accountant, right? I'm just not sure, but I think that he'll have to file, he files his own return.
Yeah.
He will probably have to file a state return, and that may they may catch him on that, the income, right? New York
York's
State's
pretty savvy.
Yeah, they're pretty sharp, and they know what they're trying to do as far as the taxes go.
Yeah, so by all means, you definitely want to confer with a tax attorney on that, because you don't want to get caught with something like that and not filing it or not listing it. Yeah, it's always better to take the high road.
I was telling you about my son, and he's worked since he was a junior in high school, right? When he stopped playing lacrosse, I said, okay, well, what you're not going to do, sit in front of the TV, right? So go get yourself a job. So he's always filed his own returns, and but he'll have the same thing this year because he graduated from Canisius College, and like I was saying, he took a job in the finance office out at Mammoth Ski Resort. So he's getting paid in lift tickets and food and lodging and that kind of stuff. But he's having a great time. Yeah, he was a little abrupt, Linda. I mean, he was here. I finished school on a Tuesday, and Thursday he was gone. Right.
Another phone call for you, though, Jeff. Good morning. Hi, Linda.
Yes. Good morning.
Go ahead, please. The time with Jeff starts now.
Yes. Hi. I was just wondering if you have to itemize for charitable deductions.
You have to keep track of charitable deductions, and it will depend on your income level. And again, this is return specific, so it's very hard to answer.
Right.
But you do need to keep track of them, and if you itemize, you can deduct them.
Okay. All right.
Right.
What are some of the biggest things that people forget when it comes to getting ready to file your taxes and getting all your information ahead of time and planned?
Well, the biggest thing that we see is the capital gains calculations. And then the IRA contributions are the two things. Now you can put those off, like I was saying earlier, but those are the two big things.
Right.
It's my returns tend to be kind of complex, but I've really developed a very simple system. I put them in a file, put the spreadsheets together, hand them to the accountant. She loves us the way we do it, right? And the accountants really like the way we handle the capital gains because we do all the work for them. We get it all calculated and sent right over. And
listen, everybody loves being with SC Parker because you really give people that sense of that they're taking care of everything, and you will have people prepared for their taxes. This is January, folks. This is a great time to get involved with SC Parker and Company. They have a lot of seminars coming up. It's a way for you to hang on to your money, and there's nothing wrong with that. They are located at 5892 Main Street in Williamsville, so give them a call. If all this is too much for you, let these folks help you manage your money to make sure it's going to be there for you for the rest of your life and beyond. Give them a call at 632-6800 or log on and find out what they do at scparker.com.